In this video, I bring you a guide in how to trade with volume in cryptocurrency and in Bitcoin. So, volume is one of the most powerful indicators that you have in your arsenal or in your toolbox as a trader, because volume is a leading indicator, not a lagging indicator. What this means? Volume is taking the pulse or the pace in the exact time that the actions are occurring in the market, because volume is another metric that derives from the price, okay? For example, EMAs, moving average or exponential moving average, or MACD or RSI are derivatives from the price, and they are lagging because they are making calculations. These indicators are making calculations based on past data, okay, in data that is old. Instead, volume is making calculations in what is actually happening in the market. So that's why it's a very powerful indicator for making decisions for buying or selling or keeping a position in the market as a trader. So for trading with volume as an indicator, we need to have in mind three main scenarios, okay? The first scenario is when the volume indicates an overbought on or oversold state of the price, okay? So for example, this is obviously accompanied or goes in hand with a price action. Let's say with price action indication, okay? So when the price action indicates a rejection on one side or another in a resistance or a support level, and we see a spike in the volume, because this is obviously always with spikes in volume, we can interpret that if we are approaching a resistance level or a support level and we see a spike in the price action accompanied by a spike in the volume, we can assume that we are in a scenario when the price of the asset of Bitcoin or every altcoin, Ethereum, is overbought or oversold, and we in this case we can make the decision to sell the asset or to buy the asset, okay? After this, I will show you examples of every of these three scenarios, of the main three scenarios where the volume is very helpful, okay? Then the second scenario that we find usually in cryptocurrency trading is the trend continuation. So most of the time when we see a large spike in the volume, we can assume that this spike in the volume is helping the trend to continue in the direction. If we see a big spike in the selling volume, we can assume, if the price action also combining with confluence with the volume tells us that we are in a trend continuation move, or in the opposite side, if we see a lot of buying volume, we can assume that the trend continuation is in the opposite side, so to the upside, okay? And in the third scenario, we have the volume spikes that leads through breakouts. Let's say that we have the price in a support or resistance level, and then we see a lot of volume entering, a big spike of volume entering. Let's say if we are in a support, a lot of selling volume to break this support, and if we are in a resistance level in the price, we see a big buying volume to break the resistance level, okay? So now I'm going to give you a few examples of every of these scenarios so you can see what I just explained. First of all, I want you to know that I don't use volume as it comes by default in TradingView, because as you can see, here is the actual volume indicator in the upper part of the chart here. This is the actual volume. I mostly use the relative volume because for me the normal volume is very noisy. Let's say we see a lot of spikes, okay? And the relative volume calculates the volume based on the previous volume of the previous candles. It cleans a lot of the noise that the volume chart is displaying. The normal volume chart displays more noise than the relative volume chart. So in this video, I'm going to use the volume and the relative volume, but I want you to know that in my trading strategy and my actual trading, and I use the relative volume instead of the normal volume, because the normal volume is more noisy, and it's not that it gives false signals, but it's more data here, and I want my brain to use as few energy as possible to interpret the signal. So instead I use relative volume because it clears most of the signals, okay? So this is one thing I want you to know. The first example that I'm going to cover is the example where the volume is indicating an overbought or oversold level in the chart, okay? So here we have a large spike in volume, in selling volume, because the volume is red, and also the relative volume is displaying the same spike in the volume, okay? So we can assume that this candle was a candle where a lot of selling volume, let's say people that is in fear and is selling their positions, or a lot of people that is being liquidated because they are in long positions, so they need to close their long positions, or their stop loss are getting triggered, okay? And why I tell that this is an oversold level? Because, as I said before, we have the price action indicating a long wick, okay? Obviously, when we see long wicks, it's because the price goes here, cleans this area, all the liquidity in this area, it displays a large spike in the volume, but then the price retraces, okay? Because as I said before in the explanation here, okay, the first scenario is when they overbought and oversold accompanied by the price action wicks, okay? So in this case, in this example, okay, we have a big wick, so we have the price action, and then we have the spike in the volume. So we can assume in these cases this is a buying signal, because we see the relative volume or the normal volume giving us a large amount of volume transacted in this candle, and then we also combine this with confluence with the weak rejection from the support side, because we can assume that here we have a support, okay? Before it was resistance, now it's support, and then we see that the candle was rejecting here. Indeed, the price retested the support, but then it led to a major pump to the opposite side, okay? So we can assume that this selling volume, this candle here, was the trigger, the buying trigger, the buying signal, okay? That if you bought here or longed here, you got all these profits to the upside. Now I'm going to cover the overbought scenario of the volume. As we can see here, okay, the volume is displaying a large spike on green because a lot of buying volume is coming here into this candle, okay? Also the relative volume is displaying a high relative volume, okay, in the same candle, and we see that indeed the price action here we did not have the wick, okay, the wick of the rejection, because many times the price doesn't give us this wick, but here is giving us depletion. We are in the 4-hour time frame, and we see that here many rejections from this level, okay, and indeed that leads to a reversal in price, okay, a very strong reversal in price. So we can assume that this candle in this scenario is giving us a lot of buying. So we can assume that the asset, in this case Bitcoin, is overbought because a lot of people is FOMOing inside of this candle because they are expecting after this uptrend, they have fear of missing the uptrend, and then a lot of people is buying here, then the price stalls here at the resistance, is giving depletion, you see depletion, the candles aren't moving, and then the price starts to retrace into the opposite side, liquidating or longs and giving this downside. Now I'm going to cover the example of the trend continuation, when the volume means, with a large spike of volume, means trend continuation. For example, here we can see a large spike in volume in this candle here, okay, this candle here, and also a large spike in the relative volume. But the price action is not giving us a weak rejection, a clear weak rejection from support. So when we see this candle and we see that the price is following down, we can assume that this large volume transacted in this candle will lead to more downside. And indeed, it lead to more downside. So why we can assume that this candle is not a buying signal? Because the asset is oversold, because the price action is giving indecision. We see a small body with long wicks. These usually are indecision candles, okay? Because the price, we don't know, the market is not agreeing if going higher or lower, and we did not see a weak rejection from the support level. Now I bring you one example of trend continuation in the bullish side. Okay, in this example we can see here green candles, green volume spike, green relative volume spike, okay, and high relative volume, and we see a wick to the upside. Then we see another green candle with green volume spike, and green relative volume spike, and the same here. We see these three triggers, okay, and we see that the price is continuing higher. So here it was a fake signal because we see the weak rejection, but then the price continues. Here is the confirmation of the trend continuation because we see a large spike in volume, and then the price is continuing, another large spike in volume, but the price action is not rejecting, okay? We see a big body without a long wick, okay? This doesn't mean that the asset is overbought, okay? This means that the trend is continuing because we see the volume, the positive volume, the green relative volume, okay? And we see also that the price then continues to the upside, okay? And leads to a major upside after this trigger. So we got here three triggers. One trigger to indicate trend continuation, two triggers to indicate trend continuation, and four triggers to indicate trend continuation. Why we know that this is trend continuation and not overbought or oversold? Because of price action. Here price action is telling us that the movement has a lot of momentum, a lot of buying momentum. Also here, this was a fake signal, a very good fake signal, because we see the weak rejection, the big spike in volume, so we can think that the price is overbought and we may be tempted to sell here the asset, okay? But this was a very good manipulation, very well executed manipulation to fool you to sell here if you are trading based on volume, okay? And then you will miss out all these major uptrend till the current levels of the price. Then, as last example, I will give you the third scenario, that is when we break out a support or resistance level, okay? So here in this case, we broke this support level, because you can see here this area was resistance, then flipped a support, and then flipped again a support. But for breaking this support level and piercing this support area here, we see that a lot of volume, negative volume, selling volume was entered, also relative, and we see that the price action was very strong, the momentum was very strong. There was no weak liquidation wicks to the downside, okay? So we can assume that for breaking this $21,000 support level, a lot of volume was entering here, a lot of selling volume was entering here, and then the price, obviously, when we break out a level and we find support, the price usually tends to rebound to the opposite side. As you can see here, also, another example, turning back into the second point that I explained, the second scenario, this is trend continuation, because we see green volume, green relative volume, and we see a big wick, big green candle with a lot of momentum because the body is high, the wicks are shorter, the body is very long, okay? So this means that this candle has a lot of buying momentum. So we can assume that this is trend continuation, bullish trend continuation. Another example of a breakout of a support level is this. We can see here that the price is rejecting this support level many times. So we can assume that this is a high quality support level, okay? And to pierce this support level, we see a big spike in the volume, in the relative volume. Also the price action is indicating a big correction, a big wick, a big candle, okay, with a lot of momentum. Then the price continues lower and then it fights support, okay? So many times when the price breaks out a support or a resistance level, a lot of volume is required to break this level. And indeed, this leaves clues in the chart that we as a trader, we can take profit from. So in this case, this breakout volume that we see here, this relative volume that we see here, accompanied by the volume and the price action, tells us that this is a very good buying signal to buy. And indeed, this was the bottom of 2022 that leads to the major uptrend that we are right now, that leads to the $55,000 area that we have the price right now. Another last example, here for example we see a weak rejection accompanied by relative volume, by normal volume, selling volume, and with this weak rejection we can assume that the price clean this area of longs and then it will reverse to the opposite side. Okay, we see here a lot of buying volume. This candle is indicating momentum, but we see that the following candles are stalling here, are showing depletion. Okay, and this candle here with a lot of normal volume, selling normal volume here, this means that a lot of people is trying to push the price higher, then they sold, we see their rejection, and then the price got rejected to the opposite side. So we here, the relative volume didn't give the signal, but the normal volume gives the signal, okay? Because normal volume is more noisy, gives more false signals, but it is more sensitive, so you can see more accurately what is happening in the market. But as I said before, has a lot of noise, and this noise is messes up a lot the chart, okay? And for me, it's better to use the relative volume instead of the normal volume. Now, for ending the video, I will make a summary of all the topics that we covered in this video. The first topic that I covered in this video is that the volume is a leading indicator, not a lagging indicator. This means that we have information and data about what is happening right now in the market, okay? Then the first scenario that we found that the volume is very helpful for us as traders is that for identifying overbought and oversold levels accompanied with price action, we need to find confluence with price action. The trend continuation, when we see volume spikes and we see that the price action is not telling us that there is a clear rejection with long wicks, okay? So we can assume that these candles with a lot of momentum are indicating us trend continuation to the upside, bullish continuation, or to the downside, bearish continuation. And then the third scenario is obviously that when we are breaking a support level or a resistance level, in the case of the support level, a lot of selling volume is required to break this high quality support level. And in the case of the resistance level, we need a lot of buying volume to break this resistance level. So many times large spikes in volume lead to breakouts or mean that the price is trying to break a high quality support and resistance level. As always, I encourage you to follow me on Twitter, to subscribe to my YouTube channel and give a like in this video. This way the algorithm will push my videos to a higher audience. And obviously follow me on Instagram and on Rumble. So thank you for your time and we'll see you in the next video.